Hello, everyone. I'm Piet van den Boer, Head of Marketing at Frollo. I'd like to welcome everyone to our webinar, Comply, Compete with Open Banking Data. In our previous webinar, we discussed our experience becoming the first accredited data recipient fintech in Australia. Today, we'll be doing a deep dive into open banking data and what you can do with it. And it's great to have you all here, as this is the time to think about how you're going to make the most of open banking data. Many businesses are applying to also become an ADR or are talking to us to see how we can help them leverage open banking to gain a competitive advantage. And in only 2 days, we will actually go live with open banking in our consumer app with a managed rollout. So without further ado, I'll hand it over to our CIO, Tony Thrassis, and our head of sales, Simon Doherty, to talk to you about how to make the most of open banking data.
Thanks, Pete. Good morning, everyone. I'm Simon Doherty, Head of Sales at Frollo. So I'm the lucky guy who gets to talk to clients about the solutions we can drive from open banking, the consumer data right, which, as Pete said, is an exciting place to be with only 2 days left until we actually go live. So I've got Tony Thrassis with me, also known as TT. He's our CIO at Frollo. And among many other technical things in our business, Tony is also very much our open banking guru. How are you, TT?
I'm good, thanks, Simon. Thank you for that. Now, I know as a salesman, your motto is to sell, build, design. And I know we're not doing that, but you can't have everything your own type.
It's fine, mate. So what we're going to cover in the next 20 minutes or so is a little about Frollo and who we are, the types of data that currently come under the consumer data right. And we'll look at some use cases that cover both the compliance side of open banking, but perhaps more importantly, some examples of how we use open banking data to compete in the market and ultimately benefit consumers and the businesses that serve those consumers. As a number of you will be aware on this call, Frollo is a purpose-driven fintech. So what that means for us is simply that we're on a quest to help people feel good about money. What we know is that 1 in 3 Australians feel financially insecure and stressed about money. So what we've done is build really simple to implement technology that helps businesses, their customers and employees to turn around their finances. So that all starts with using the highest quality data available to be able to give people real insight into their current financial position, and then helping them take steps that deliver better outcomes, whether that's controlling your debt, growing your savings, or getting the right financial product when you need it. All that should lead to an improvement in your overall financial health that you as the end consumer see as a positive trajectory. So we do that in a B2C context through our consumer app, as well as in a B2B context with delivery of our APIs through a variety of solutions to banks and finance businesses. Gareth Gumby, the founder and CEO of Frollo, actually started the company with the express knowledge that open banking was coming based on what he was seeing in the UK and Europe. So as a business, we've always been focused on how open banking is a new era in financial services and how we'll be able to use that to improve people's lives. A little about the solutions. These are our solutions that help people on that positive path we need to build engagement with the consumer. And the starting place for that engagement is with features such as account aggregation and transaction enrichment. So using quality and timely data to enable consumers to see their complete financial world in one place. But like most finance businesses, we also need to build trust with the consumer, which we do by making sure our features are delivering a positive impact. So a couple of quick examples of that. We know from the users of our app that they experience a 30% reduction in credit card debt within 6 months of starting with us. And on average, they'll get an 18% increase in their savings. And the reason that's good is these are positive and measurable impacts, all driven from how we can use quality data to build solutions that engage consumers and develop trust. So I'll stop talking about Frollo in a minute and hand over to Tony to talk more directly about open banking, but just wanted to give you a little more detail on the B2B side of our business, which we deliver through a set of API-driven features. We manage these APIs from our SaaS integration platform and deliver them into our clients' digital worlds to support their existing market proposition. Or we do that via complete white label solutions, now starting to be driven from open banking data. We're also now simplifying the world for others who want to be part of the consumer data right, whereby we're offering solutions that enable clients to both comply with the regulations around the open banking data, around the consumer data right, but more importantly, compete with the power of open banking data. I'll get into a few use cases for that in a couple of minutes, But Tony's now going to update you on where we're going in open banking. Over to you, TT.
Thanks, Simon. So have a look at this open banking timeline. It is a lot of information there. You can break it down. Let's break it down into 3 blocks. The time to July, then the majors implementation post July, and the non-majors 12 months later. So if we look at the time to July, it has been a very busy period. The making of the rules, the ACCC's launch of the Consumer Data Right Register and Accreditation Application Platform, the RAP. It's quite a mouthful, so from here on, we'll just call it the registry. The initial participant program, made up of industry testing, regression testing, accreditation, and live proving, just to mention a few. But what is industry testing? It's worth talking about a little. It's making sure the bank systems and the registry work as specified. It required hundreds of test scenarios to be executed across security profiles, consent, and banking APIs. And we executed testing with more than one bank. Many issues were raised. If you're interested, you can see some of them in GitHub. Tests were not just positive test cases, but negative test cases that required development of specific code to perform and collect evidence. We worked through ambiguity and many changes along the way. We developed our own test suite and our own mock bank to test against. This made life so much easier, both for industry testing and our own regression testing as changes continue to occur. Then the timeline post-July, we'll see a bedding down of the bank's open banking implementation. Then in November, phase 2, new account types such as mortgages and personal loans, new capabilities in joint accounts and concurrent consent, and even more API data such as direct debits. So some fairly large changes coming along. But how will these be tested? The expectation is that data holders and data recipients will test their own software and then use the yet to be finalized CTS conformance test tool as part of their accreditation process. But the more exciting part is that we are just a few days away from going live, and the Frollo team is truly excited to see all the features in our app being driven by CDR data.
Yes, we are, Tony.
Therefore, the $1,500 payment shouldn't.
I dare say that the ACCC and banks are just as excited and probably just a tad nervous. Let's move on to product reference data. Let's talk about what it's all about. So to comply, on the 1st of October 2020, the non-major banks are required to make their product reference data publicly available. For APIs, what is actually needed? Well, the APIs, of course, to meet non-functional requirements. If you're using someone else's service, then SLAs will come into the picture. Usage reporting, performance reporting, throttling, and also an admin portal to manage updates is essential. You need to think about how do you update? Is it via direct entry, integration to another system, spreadsheet, CSV, JSON, XML, etc.? And how do you validate the data input? How do you approve that is correct before you go publishing it? How do you schedule the updates? And then there's user security. So the message here is APIs are only a small part of what is required. The more exciting concept, of course, is where you compete. Do you want to see and analyze other data holders' product data? Then product reference data allows you to compare. If you add notifications, you can save time by being aware of your competitors' changes. Without product data tied to transaction data, it is more difficult to deliver insights or provide a better deal to customers. This can help consumers avoid the lazy tax that the government wants to address through CDR, allowing customers to have the information and means to switch providers. Simon will talk to examples in later slides. We are now testing our product reference data solution with 3 banks and seeing some great ideas come out of that testing. The Frollo consent flow. The best part of this slide is actually I get to announce that the very first live consent occurred on Saturday, the 20th of June, 2020, between Frollo and one of the big 4 banks. Exciting times. It has happened. And yes, we have been spending a few weekends on the CDR program. Consent under open banking is more transparent and a more positive experience. our testing shows that we will have a much higher level of conversion when onboarding and connecting accounts. Today, we see 50 to 60% conversion. Tomorrow, we expect to see that at a much higher rate. Of course, the consent needs to comply with the rules, but what else? You do need to consent to you do need to align to your CDR policy, the dashboard, your consent statements, and support. You need to be consistent, which is one of the key messages that the ACCC gave us. There are also future consent considerations, such as concurrent consent, which are just around the corner in November. But best just to show you a compliant consent example. So we'll just switch to our prototype. So on the first slide, we start the onboarding process for open banking. It's not a consent flow just yet. We go through the onboarding part to start with, where we suggest that we need to link accounts. We move on, and then we can see the banking providers for which accounts we want to link. So we select one of those. Let's say we select CommBank. We then go into the first open banking consent screen, actual consent screen, where we talk about, we have the CDR logo. That's the official CDR logo. You can see up top there. We talk a little bit about what we're doing with the consumer data right, the fact that it's secure and stable, and then move on to the actual beginning of the consent screens. So here you can see on top the Frollo data, the Frollo recipient ID, and the official consumer data right logo. We start, the consumer selects one of a period that we offer in our use case, 3 months, 6 months, or 12 months. And then we start to talk about what happens if you want to withdraw your consent. So we confirm the consent period. We confirm also the data clusters, the account balance and details, and the transaction scope. This is what the consumer is actually consenting to, allowing us to collect this type of data. Once we start going through that confirmation, we look at and provide the key dates, the sharing period, information around how often we'll access your data, and what happens after you stop sharing it with Frollo. We then redirect to your bank, and this is, we start looking at, this is a Frollo mock bank, it's not the actual CBA bank. So we start redirecting, connect you to Frollo, connect you to CommBank, where you type in your customer ID. You will receive from the bank your one-time password, so the data recipient doesn't see that one-time password. It's all between the bank and the consumer. They then select the accounts from the bank. Again, the data recipient doesn't see this. It's between the consumer and the bank. Once they've selected what bank accounts can be shared, they then confirm and redirect back to Frollo. Once that consent is redirected back, we automatically hit the banking APIs, and you can start seeing your account balances there on that screen. We retrieve transactions in the background as well. We then need to provide you a statement of what your data sharing was about and give you some more details around how you can update your preferences and what data we're sharing. We also advise and let you know how you can stop sharing and what happens to data if you stop sharing. In Frollo's use case, we will delete that data that we retrieve from the bank. So further information around the stop sharing process and what the impact is, and a little more information around what happens when your consent is withdrawn. You do receive a PDF. You can see the PDF down the bottom. We send a PDF with all that information, and that's part of the rules as well. Okay, so now back to the presentation. Moving on to, so once we have the consent, we move on to the transaction and the account data that you saw we were just retrieving. And as I said before, consumers will consent to data clusters such as account balance and details and transaction details. This is the data that we will retrieve under our use case. So APIs are much, much faster than screen scraping and far more reliable. That's just the difference between hitting a website and an API. The data standards specification is for 99.5% uptime and responses of between 1 to 6 seconds, depending on the size of the payload and the API. We're typically seeing response times of under a second. And in the UK, the first release of the bank APIs were not stable, and we should expect the same. Over 2 years, however, stability increased and the number of requests across the banks grew tenfold. The OBIE, the Open Banking Implementation Entity, reported growth from 30 to 40 million requests per month to 400 million in the last 2 months. The UK experience also showed that there were differences between bank implementations, and that added to the complexity for data recipients. So how variable can account data and transaction data be? We already know that it can be different by bank and by account type. Optional data also presents the most challenges, and this is different by bank. How do you take this into account? Our decision engine and AI capabilities have now been built to do this and will continue to be refined as we see more CDR data. The key message here is that data drives both insights and the type of features that Simon spoke about earlier. So how do we take data into action? As I alluded to earlier, the combination of product reference data and transaction and account data together will allow fintechs and banks to provide valuable insights to a consumer. Data needs to be real-time, but this is just the start. In the last webinar, I referred to our AI engine as our new heart. It has been designed and trained to enrich open banking data for use in the features our customers use. We are seeing very high levels of accuracy in our spend categorization and merchant identification. This accuracy and having data in real time just makes everything better. Insights, targeted offers, bill tracking, goals, financial wellbeing score, and all the features that Simon showed you before are just much better with AI. Simon will now begin to talk about some examples.
Thanks, TT. Conscious of time, so I'll move fairly quickly. I've just got 4 examples of use cases for open banking data. So as Tony mentioned earlier, product reference data allows us to understand in detail the financial product that people are using. We can then use our AI engine to cross-reference that with their transaction data. What we found in this example was 82% of people with a bonus interest saving account weren't getting all the bonus interest that they qualified for. So we're then able to send them a nudge in the app, making them aware they'd missed their bonus interest historically and we're about to miss it again. We could then measure the fact that 20% of these targeted users did achieve their bonus interest in the month we sent the notification. What we're seeing there is how we're able to deliver consumers a direct financial benefit off the back of them consenting for us to access their data. It's just one small example of how open banking data in conjunction with the right AI means we can start to deliver value to consumers at a very personalised level. It's a great example of that true customer of one approach to the market, delivering value in a very personalised context. The single financial view is perhaps one of the most compelling base cases for consumer data, right? And that's about enabling the consumer to see their total financial world in one place. As we move into open banking, that customer experience becomes much richer because of the speed and reliability with which we can access consumer data. So the power of open banking data becomes compelling for a consumer when they can go shopping at the local shopping centre, refresh their app as they get back in the car, and see their financial situation updated in real time. Or maybe they got a notification while they were shopping, they're about to go over their budget that they'd set for the month. But previously with screen scraping, we're only really able to deliver a historical view of the consumer's financial world, which is interesting, but typically lagged consumers' behaviour. So it kind of lacked that immediate contextual immediacy. Now, as we move to open banking data, we're moving to a real-time view of their world. So the single financial view is firstly about the data well presented, but it's about what the consumers do with that data, which is going to be important. And we need to deliver solutions that help them get over that lazy tax or the apathy penalty and make it simple for them to take action in their financial lives. And that's important because we've calculated that on average, consumers are losing over $1,100 a year by not being on the right product. And that's potential upside that's material enough for people to actually take action. How you feel about money is often overlooked when you're talking about the needs of consumers in financial services. However, we know that today over 50% of the population is stressed about money. And I guess we can expect to see that increase as the economic impact of coronavirus plays out over the coming months. So how do we do a better job in the business of financial services of helping people feel good about money? I mentioned at the start that being able to demonstrate to a consumer they are improving their financial well-being develops trust. And the reason that's important in banking, as much as it is in the energy sector or telco, is that when a consumer has given you consent to their data and they see that you are using that to improve their life, you gain an increased level of trust. So open banking data drives the technology innovation that can help improve financial well-being, but it's the combination of that technology and environment of trust that enables you to compete effectively for the consumer's next best financial product, compete for who their main bank partner should be, compete whether they switch energy providers or what the next best loan product is for them. And finally, I want to talk about credit decisioning. It's one of the most compelling use cases for the consumer data right emerging from markets like the UK, and that's mortgage application. So currently the mortgage application takes around 21 to 60 days. It's usually a very manual, lengthy process, gathering bank statements, maybe some OCR capture, stressful back and forth process of clarification between client and customer. With the consumer data right, the consent to give you all the data needed. With the consumer data right, the consumer can consent to give you all the data needed for a mortgage application instantly. So we're seeing that with banks like HSBC in the UK, who are using open banking data to approve
like everyone,
all of in 5 minutes. They can do that because the client has already passed a KYC AML process with the bank if they have a bank account in their name. And then you're instantly accessing their live transaction history. Therefore, the first conversation with the customer about a mortgage is about what product is right for them based on accurate and real-time understanding of their financial position. So that's a great experience for the consumer because they get to an immediate discussion that benefits them. And it's good for the business because the time to yes for a loan is reduced to potentially minutes or hours rather than days or months. So we're coming to the end of the webinar part of the presentation. Before we move to some questions, TT is always keen to have the last word, so I'll hand back to you, Matt.
Thanks, Simon. Just a few points to make. So, word of advice: it takes longer than you think. CDR is complex, and really, there's no time to lose. I guess the second point is that CDR will drive digitization in a more B2B way than just B2C. Consumers will be in control of who sees their data. And maybe the third and final point before we get on to questions is that what we're seeing in the UK is the banks in a way jostling for being the multi-bank app of choice. So that's, when we talk about aggregation, this is what the banks are doing as well.
Yeah, very true.
Okay, so we can get on to some questions.
Yes. Well, thanks, TT. Thanks, Docs. This was very interesting. We had some questions come through beforehand. We also have some questions come through during the webinar. If you still have questions, you can send them through. You may actually win a pair of Frollo socks. I know they were very popular during the last webinar. So yeah, go on and ask your question. We'll try to get to it. To start with the first question, we got this one through beforehand. How was the process of integrating the technical standards from the data standards body into our product? It appears to be quite prescriptive and detailed. And do you foresee any problems in incumbents needing to transition to these new standards? And potentially that would open up some sort of opportunity for outsourced technology providers.
That sounds like your ballpark, TT.
Yeah, it's a good question. So yes, there is complexity, as I alluded to before, and there are some differences in and around encryption algorithms and many things. Actually, being one of the first participants for us didn't make it any easier because, as I said, we worked through all of that ambiguity and all of those different elaborations and changes to the standards along the way. I think it'll be much easier for the next lot of participants to come through. They won't actually be doing industry testing or finding the same early sorts of issues that we found. But I think the person who wrote the question is right. It won't be simple, and what they have now will need to change. They'll need to look at their use case, look at their app or their website, whatever it is that they're going to be pulling open data for, and changes will be needed.
Right. So you referred to the fact that the process that we went through is not going to be exactly the same as the process that new potential accreditants will go through. So a couple of people have asked us, how did we actually find the accreditation experience? Was it an onerous process? Was it, was it a breeze? How did we find it?
Again, being the first, it was very difficult actually. We were the first to actually do a 3150 for accreditation, which the ACCC set for a non-bank. So we're a non-bank. Banks have a streamlined process. It's a little bit easier for them. They don't actually have to do an ASAE 3150. We did. And that was a new process, both for ACCC and for us. So we hit upon all of the issues up front. Again, the second lot of recipients that come through shouldn't find it as difficult. Mind you, the security requirements and the data privacy requirements don't change, and so they are fairly high hurdles to get over if you're not a bank. And I guess my advice there would be to probably seek advice from people who know and understand what that is.
Yeah, and I think on the business side, the very simple summary is it took a lot longer than we expected and cost a lot more than we expected.
It absolutely did. We started in September, October, thinking that the timeline was going to be sometime in February, with the issues of COVID that banks had to face and the security risks. It was put out to July, but we all needed that time to be truthful. We needed that time, and even now it's still a bit of a rush to get in. Of course, the downside of that was it cost us a lot more over a longer period.
Great. I see that we have quite a number of extra questions coming through just now. I'm sure we won't be able to get through all of them during the webinar, but what we'll do is once we're done here, we'll see if we can answer them in another way and share those answers with you. But let me just pick one here. So one question that also came through is, so we're going to be using open banking data from the 1st of July for the big four banks. We have been using screen scraping data through partners like Yodlee. How does becoming an accredited data recipient affect our relationship with web scraping or screen scraping aggregators such as Yodlee?
I think all the people like Yodlee understand that with open banking, there will be a move away from screen scraping. It is more secure. People don't want to give out their passwords directly to third parties. So there is that move away, and I expect the screen scraping organisations today themselves will be moving to become open banking intermediary aggregators, if you like. For us, what it means is that we will live with both. Not every bank or data holder will be on open banking to start with. As you can see, there's a period of time for the non-majors to implement. And so, we have customers with an account, say at CBA, and an account at ING. The CBA account might be under open banking, but ING will need to be under screen scraping if we're going to provide an aggregated view, which is what we do. So this will be a period of time where screen scraping and open banking coexist. We won't have, say, CBA on both open banking and screen scraping, but those who haven't achieved open banking yet, they'll need to be screen scraped.
All right. Let's see. Something else. So do your APIs provide access to the AI capabilities? E.g., do you provide a view of income and expense based on transaction categorization?
Yes.
I like that question.
Yeah. And the answer is a strong yes. So I'll let Simon talk about it in a minute. I will just say that we've both separated our aggregation capability and our enrichment capability. And so our APIs for enrichment are separate to the aggregation function. And we can offer those to B2B to other organizations three ways, actually, but through APIs directly, through an SDK which calls the APIs, and that's a very fast method. I mean, we've found for one of the banks that we work with, we integrated the SDK in less than a day, so it's super fast. And then the third method is to actually just offer services and know-how in order to allow people to integrate to ours. So we can either do it from the front end or machine to machine at the back end, or both.
Yeah, I mean, fairly well covered, TT. I'd just add that, we've been aware for a long time, as I said earlier, that the ability to impact credit decisioning is something that's a very strong use case, what we've seen out of the UK. And certainly that's something that we want to be providing for people to help them speed up all their lending decisions.
Yeah, and one of the things I talked about earlier was really just trying to get much higher levels of accuracy than we're seeing out there in the market, because it's the accuracy that will just make things better.
Yeah.
Okay. Look, we still have plenty of questions that we haven't covered yet. As I said, we'll come back to those at a later stage. We'll try to answer them and get you those answers after this. We did promise a half-hour webinar, so let's stick to it. I'm sure everyone has got some other things to do as well. Thank you all for joining, and thanks again, TT and Simon, for presenting. And please, everyone, if you have any questions about how to make the most of open banking, or you'd like our input or views on it or help, get in touch. Thank you.
Thanks, Pete. Have a good morning, everyone, or afternoon now.